Joining the stage. Here we go. Okay. Well, I think we're ready to go. So I will kick us off. My name is Eleanor Terrett. I'm the host of Crypto in America podcast and newsletter. I'm formerly of Fox Business. And I'm joined today by two awesome guests. With he is the host of Bitcoin Treasuries podcast and has a background in the oil and gas industry, M&A, which I'm excited to talk to him about. And Dr. Matthias Hafner, he's the director of the Center of Cryptoeconomics and head of blockchain and crypto assets at Swiss Economics. So we're going to have a bit of a Bitcoin versus gold discussion today. So I expect some fiery takes. But first, I wanted to look at the price of assets. Gold hit a record high of 3,245 an ounce yesterday. It's down slightly from that today, but it's still up as investors are looking for safe havens to turn to amid this tariff negotiation, confusion, whatever you want to call it, going on the national stage right now. Bitcoin is up over $85,000 today, and the rest of the crypto market is down notably, most of it anyway, most of the major cryptocurrencies. There's been some question over whether Bitcoin is starting to act like a safe haven, a store of value that provides cover in market volatility, just like the role that gold has played historically for many years. While skeptics say it's too early to tell whether Bitcoin is a safe haven just yet, as it's still subject to pretty volatile swings, anywhere between 20 and 30% in a normal cycle. Is it too early to call it that safe haven store of value? So my first question to you, Matthias, is can we call Bitcoin a safe haven yet?
Yeah, very good question. I think we see an adoption and we go more and more in that direction. As you said before, I mean, we see volatility in Bitcoin, but we see also an acceleration in the volatility. It comes slower and the cycle becomes smaller. So I think the vision that Satoshi told us, basically, it becomes clearer and clearer over the days. And we also see we have many crises with Bitcoin crashing or have price declines, etc. But the declines are shorter. They're less. They're softer, basically. And to my view, it's too early to call it a safe haven. But we see that Bitcoin goes in that direction to be a safe haven. So I think there is potential for that, but we are not there, to my opinion.
Not there just yet. Tim, my next question to you. Gold has thousands of years of history as a reserve asset. I mentioned before Bitcoin starting to act that way, but gold definitely has the track record, or the better track record, I guess, just in terms of being the older asset. Bitcoin's been around for less than 20 years at this point. So what gives Bitcoin a fighting chance at challenging the status of gold?
Well, I think it would be constructive to think of Bitcoin as the monkey bar in between gold and AI. So if you remember as a kid, you jump up on the monkey bars and the first monkey bar is gold, right? It's been there for quite a long time. Most of us are familiar with the basic attributes of it. For the past decade and a half, we've witnessed gold underperform and Bitcoin overperform traditional markets. And the majority of individuals, institutions, governments have had the pleasure of underperforming the markets due to not understanding and appreciating the technology of Bitcoin, the asset, and Bitcoin, the network. So as artificial general knowledge intelligence, AGI, or just AI, becomes smarter than the smartest of us during the next, let's say, 1 to 6 years, we don't know, but this is very fast moving. We as humans we won't have the same ability to ignore AI in the way that we've ignored the loss that most of us incurred in the financial markets as it pertains to Bitcoin. So we'll have to have a way to timestamp and tether to reality, like what is real, what is not, what is authentic, what is a deep fake. And that's where the value of Bitcoin, I think, as a technology, tethering us to what is real, will become increasingly apparent. And not only apparent, but a requirement. And so in the same way that gold is this shiny rock that's a store of value, and Bitcoin has largely been the parallel, right, digital shiny asset, moving forward, Bitcoin will not only decouple from the traditional financial markets, but it will become a necessity for us in coupling ourselves to reality. and to what is real. And I think that will give Bitcoin a value that is kind of incomprehensible to us today. And AI will make the most compelling case for Bitcoin that we've seen to date. So gold will still have certainly a place in the minds of those who hold on to the idea of a physical bearer instrument, but more and more of those generations and ideas will be replaced by the digital economy.
Just want to follow up quickly on that. Bitcoin was originally created to be a peer-to-peer medium of exchange, but it also has the qualities of gold, wherein it's a store of value, right? Do you see it more? I think there's sort of maybe a divide between people who are original adopters of Bitcoin or fascinated by the technology in the early days, kind of seeing it transform from this medium of exchange, this peer-to-peer technology, to more of a store of value. How do you see it in the long term? I mean, will we be using Bitcoin to pay for pizza in the long term, or is it going to be much more of that store of value that we, invest in for the long term?
If it's directed at me, I'll give a shot at it.
Oh yeah, sorry, Tim, that was to you.
Yeah,
And then Matthias can jump in as well. Go ahead.
I think you'll see the coffee buying happen on layers 2, 3, 4, and above, and I think you'll see nation states settling large transactions on the base chain. That's where the actual Bitcoin, the network, the blockchain, you'll see for larger transactions, and then everything else will be on layer 2 and above.
Gotcha. Matthias, go ahead.
Yeah, no, I just can add here. I think this what you said. Basically, we have Bitcoin. I think it's not different questions. It's basically the same. So what we have is a store of value that can be transacted on a peer-to-peer network. And this goes hand in hand, so it doesn't need any intermediary. And therefore, basically, from the use case, it's not, to my view, there is no separation of the two. And as we have this volatility, etc., and obviously the transaction motive for retail and daily transactions becomes more interesting on layer 2 and 3 and less on layer 1, because with more and more adoption, it also becomes more costly to do these transactions on layer 1.
Mm-hmm, mm-hmm. Tim, you talk to a lot of individuals on your podcast who represent companies that hold Bitcoin on their balance sheets. And that's become an increasingly normalized phenomenon, I would say. More than 90 public companies currently hold Bitcoin on their balance sheets now. So is there any common theme from the people that you talk to across these companies as to why they're adopting Bitcoin and their strategy for, the long term here?
Yeah, I think the theme that I've seen so far is that these public companies that are adopting any sort of sizable Bitcoin strategy, they're really zombie companies where they need to acquire another company, they need to pivot somehow, and somewhere along their journey they've found Bitcoin. So they're really these zombie companies that need, that they have a need to know about Bitcoin because they need some sort of solution. And then you certainly have some publics and private companies that are just, take Tesla as an example, probably just opportunistically putting Bitcoin on the balance sheet, recognizing that it has some sort of value now and some sort of value in the future, but they're just kind of placing it there and warehousing it and knowing that that's probably just the view of it being a strategic acquisition at this point.
Mm-hmm. So you're seeing that with GameStop right now. I think you talk about slightly outdated companies looking for ways to make a comeback. We're seeing that sort of mirrored in the GameStop headlines. I don't believe they've actually bought Bitcoin yet, but they're allocating some funds to be able to do that, which I think was a very interesting move. And will be interesting to see if other companies in that vein continue to do things like that as well. Matthias, talking about that, I feel like as a journalist, I see headlines every other week of, to this point we made before, companies buying Bitcoin, putting it on the balance sheet. And it seems to have happened relatively quickly, in the last, certainly in the last couple of months, maybe not even the last year or so. It is really accelerated. What do you chalk up to sort of that interest, that renewed interest in cryptocurrency? Is it a changing regulatory environment in the US? Is it Wall Street getting on board? Is it Donald Trump's endorsement? What do you think is the catalyst where all these companies are now saying, hey, Bitcoin seems to be a viable asset that we can work with in the long term?
Yeah, good question. So there are these short-term factors that play a vital role in this adoption, as you mentioned. Like we had like macroeconomic changes, like interest rates coming down, at least a little bit, or in the long run. There is like regulation, obviously better regulation of Bitcoin, but Bitcoin, on the other hand, was always, to my view, as a Swiss, was regulated fairly. Like we had the ETFs, obviously, which is a very important factor for the adoption, and the regulatory environment. All of these, I think, are very important factors for adoption. But on the other hand, I think it's a long-term game, and I think these preparations have been made before. So it's not like that companies start to invest in Bitcoin like from one month to another month. So these decisions are very well thought through, and this is just an adoption that increases over time. And I think it's in the end, it's basically the adoption is not a short-term thing. It's coming from a longer time horizon, and will stay.
Mm-hmm, mm-hmm. I think companies who adopt Bitcoin are hoping that the price maybe become a little bit more stable over time. I mentioned those 20 to 30%, swings in the market in a normal cycle. And I think volatility is often cited as probably the biggest downfall of Bitcoin when it comes to seeing it as a reserve asset. How do you get around the fact that it is just so inherently volatile? And is this going to be a deal breaker for adoption, do you think, Tim?
I mean, there's no question it's volatile, but it's really, you can reframe it with any phrase you want, maybe use adoption noise. I mean, it's the monetization of a new asset from literally zero to trillions of dollars. So there's really no way around that. And, as we're watching this price discovery happen in real time, it's like gold has volatility too. So it's just kind of picking which one or both you really want to.
That's true. That's true. And actually, that was my follow-up question was, we have seen gold act pretty volatile or have volatility over the last, couple days, weeks with the tariff announcement. It's been going up. It hit an all-time high. It's come back down. So Bitcoin, gold is arguably also volatile. So why is it that the argument for Bitcoin being much more volatile is sort of the headline narrative? Is it just because it is a new technology? It's a little bit, not as much is known. It's not quite as established yet. And either of you can take that.
Yeah. I mean, I think you nailed it. That it's on the adoption curve. So right. It's the new shiny thing, no pun intended. And so it's going to be what's in the news cycle. I think as some other people in the space have said, Bitcoin's the riskiest thing that most people in traditional markets have in their portfolio. And it's the least risky thing that people in crypto have in their portfolio. So right. It's like, you kind of can't win, or maybe you're like right there in the sweet spot in the middle when you're really considering it as something that doesn't have a long track record, but does have a track record of adoption and has that 4-year, 5-year, like up and to the right sort of cycle track record at this point.
Mm-hmm. Mm-hmm. I feel like there's several ways in which they're similar, gold and Bitcoin, but there are a couple key differences that actually make one maybe more preferable than the other. Matthias, do you want to kind of weigh in on what those differences are?
Yeah, sure. I mean, so they're very similar in a sense, but if you look at the differences, I think the most obvious is that Bitcoin is digital, whereas gold is like physical. So this has implications, and I think this is also why Bitcoin, if you look at the time horizon backwards, the adoption is very fast. So it's possible to transact it from everywhere. Everyone can just transact it without needing an intermediary. Whereas gold is way more complex in that sense, as you need to store it physically. So it's more difficult to store it, and also against anybody who wants to take away it from you. Also to transact it with somebody else. I mean, over the internet, we can have a transaction of Bitcoin from Switzerland to the States or whatever. With gold physically, it's super difficult to do that in a peer-to-peer network. Again, gold has similarity in that sense. It can be used for peer-to-peer payments, or for a store of value, but it's complex without intermediaries to conduct transactions with it. I think this is one of the main differences. Another difference is like the supply. So gold has not a limited supply. So in the sense of like you can dig for more gold, and the supply is in the end endless. Might also be a possibility to create, or I think they're all ready to create synthetic gold. So this is not possible with Bitcoin, which has a fixed supply, and that is not increasing over time. I think this is another huge difference. And then, as we've spoken before, I mean, the last huge difference is the track record. Gold has a track record of 100 years, whereas Bitcoin has not, which just makes it two different assets from the perspective of time.
I don't see any Q&A questions in the chat, so I'm just going to go ahead and wrap it up with this last question to both of you, which is, we've talked about the similarities, we talked about the differences. What is the role that you see both playing going forward in the next 5 to 10 years, both gold and Bitcoin? And Tim, go ahead.
I think gold just continues to be the sleeping giant of legacy finance, right? It's sort of the insurance policy that central bankers won't give up. But you'll see Bitcoin as a larger and larger piece of the conversation, a larger and larger piece of the allocation as we move forward.
Matthias, go ahead.
Yeah, I have a similar view. I mean, we see strong adoption of Bitcoin, also governments taking more and more have a view in it, maybe also national central banks, etc. So this adoption of Bitcoin, I think we will see in the future. But gold is not. I don't think gold will go away totally. It's going to be still the physical store of value that stays here.
Yeah, I agree. All right, guys. Well, thank you so much. I think we're out of time. Our panel is supposed to be up at 11:40, so I will thank you both, and thank you to the audience for tuning in, and we'll see you guys later.
Thank you.
Thank you very much.